Hey there, Jim Hiles, your financial advisor and financial coach for First Capital and Go Plan 101, our financial wellness site. Hey, we're going to talk about what's going on. It's a tough day today in the stock market. Today is the 16th of March, day before St. Patrick's Day, usually a better day. We're going to deal with the coronavirus here a little bit. We're going to talk about the financial markets and frankly, what's most important, which is your overall financial wellness. So let's talk about that aspect first. People are stressing out. You can see it, you can feel it, you see it on the news, you hear the stories from Costco and toilet paper and everything else, and you're seeing the financial markets as well. So people are stressed, and maybe they're losing focus as to what their focus should be. And one of the things I'm starting to see is people are just glued to the TV, and that's watching the stock market tick by tick is not a good use of time, even though it feels like it might be. People are becoming gun shy of certain things. Stock market bad is not a good equation, and they're second guessing what they set out to do in the first place, whether or not the decisions they made were good. You're seeing frustration and depression and certainly anxiety and people being angry at other people. And this is not a good place to be. There's a negative emotions obviously coming out. It's not a time to totally abandon your financial plan, your investment approach, or your time frame. And it's important to stay focused on these aspects, particularly now. You don't want to get too fixated as to what it shoulda, coulda, and you certainly don't want to give up. And this is an opportunity if you look at it the right way. So first thing you gotta do, let's take care of ourselves. Take care of your family, take care of your neighbor, take care of your community. It's time really to kind of pitch in, buck up, and be an American. After all, no one's making any guarantees about life being just a bowl of cherries. We have to deal with ups and downs. It's just natural. So let's stay calm. Let's not panic. Let's not make any emotionally charged decisions or panic decisions about your money in particular, but certainly about everything else in life. There's a plan out there. There's a plan for your finances. There's a plan for how you want to conduct yourselves career-wise and publicly and so on. Stick with it. You thought about that in calmer times. We thought about the investment approach in calmer times. Don't abandon it now. Stay with what you think the right thing to do is. Stay diversified. That means you got to own different things, because diversification means it's things that are going down. Hopefully you got some things that might not be going down as fast or as much or at all. That's what diversification truly is. And understand what you do own in your investment portfolio if you're looking at that, or your financial products in general. Remember your time horizon. Oftentimes people get confused because the market goes down. That's the price, unfortunately, for higher returns. We're doing this for 10, 15, 20 years from now. That money is probably not going to be subject to a down market for the next 30 years. Matter of fact, we do expect this to recover. And over time, as it has through history, we expect the economy to continue to grow. Now, if you've got your time horizon in mind, you should take comfort in the fact that you have plenty of time for the recovery to happen. You should have some cash at hand for short-term liquidity needs. So make sure that we don't overspend at this particular point. Certainly talk to an advisor or coach about what your risk tolerance is, whether or not you should rebalance right now, whether or not you should take tax losses for individual tax loss harvesting if appropriate, and keep dollar cost averaging in. That means you just keep buying into these bad days, because these bad days are lows. You want to buy low, sell high. That's dollar cost averaging. Keep buying in little chunks all the time, whether or not you're buying at the highs or buying at the lows. Just keep doing it. A lot of you are in 401k plans. Keep doing the same aggressive allocation or moderate allocation or conservative allocation that suits you, but just keep doing it. Don't give up here. Don't try to time the market. Remember, think in percentages, not points. 1,000 Dow points now is less than about 5%. 1,000 Dow points in 2009 was 14%. So think in percentages. If we're down 2%, 3%, 5%, 10%, that's how you want to look at it, not Dow points, because it's just scarier that way. By the way, I'm optimistic. We're going to be back. You're going to be back. We're all going to be back. We've done this before. It's painful. It's emotional, but volatility and even viral outbreaks we've dealt with before. So stay with it. Stay with the plan. Get some help if you need it. We're here to help you at First Capital. Call Go Plan Coach. Happy to help you there too. If you have any questions, please feel free to give us a call. Talk to you soon. This is Jim Hiles. Hang in there. Bye-bye.